Hi everyone, let's go over my daily 4-hour and 15-minute bullish and bearish elite wave scenarios on Bitcoin. Starting on the daily time frame with the bullish scenario, where we are looking for a 5-wave impulsive structure to the upside. The common target for your wave 4 here is the blue box, the 0.236 to the 0.5 Fibonacci, 96.7k to 83.6k, with the invalidation being the 0.618 at 77.7k. Now in this scenario, what we are looking for locally is signs of strength. We want to see impulsive structures to the upside to eventually kickstart this wave of 5. At the moment, we are correcting to the downside, and the probabilities more locally are higher to still have an unfinished corrective structure in a wave 4. Alternatively, we have to think about a finished structure to the upside. So we have a wave 1, 2, 3, 4, 5. This is by no means invalidated. However, the probabilities for this scenario are a little bit less because of your wave 4 here. Now, most commonly, wave 4s are longer in time than wave 2s, but this blue wave 4 here is very short compared to the wave 2, finishing on the 0.382 Fib time taken from the start to the end of 2 to the end of 3, which quite simply is less common. However, the main difference between the daily bullish and bearish scenario is what is happening more locally, because in this particular scenario, you could, of course, instead of an ABC potentially and move to the upside, also alternatively think about a 1, 2, 1, 2, 3 or a 1, 2, 3. So local price action is very important, but at the moment on the daily, the probabilities would still be higher for a 4 and a 5 because of how short this blue wave 4 here is in time in this bearish daily scenario. If we then go to the 4-hour time frame, then on the 4-hour time frame, your bearish scenario here, there's actually 2 bearish scenarios, but I'll summarize everything at the probabilities and polyline section. So here, this is the zigzag. Now you're seeing this all over the internet, of course, but in this case, we then have a wave A, B, and a wave C. You want your wave C to move below the low of your wave A and preferably also below that wave B. Now in this case, you would then be looking for support to the downside. We have 2 areas of support here around 89.90k and then also 86.9 to 87.4k. A little bit of a, I suppose, a final level of support would be this low over here. So this low at 85k is the high of a daily gap, and once you touch a gap for the first time, then most often you get a reaction. But if you do lose that level, that's a little bit of a problem for the bulls, right? That is definitely not preferred. So actually in general, you don't really like to lose the 87k level, because if I do open all of my boxes so you can see what's inside, then you can see that below this box here at 87k, there is not too much left except for that gap top over here at about 85, right? The next level to the downside is basically 81, which of course, again, is quite a drop compared to the 87 box. So keep that in mind. Preferably we stay above it to remain really bullish. A final hurdle would be 85. Losing that is a bit of a problem for the bulls on the daily time frame. But in this particular case here, first of all, we would be looking for the areas of support here to the downside, and preferably your wave C just continues moving to the downside in a 1, 2, 3, 4, a 5-wave structure. And then we look for a bounce, right? Impulsive bounce. So we want to see an impulsive structure, either a multi 1, 2 and then a 3, a simple impulse 1, 2, 3, 4, 5 correction continuation, or a diagonal 1, 2, 3, 4, 5 correction continuation. We'll see in time what we get. The invalidation is price taking out this high at 102.7k before taking out the low. On the 15-minute time frame, an impulse to the downside, so that wave C to the downside basically, is counted like this. So we then have a 1, 2, 1, 2, 3, 4, 5 expanding diagonal here to finish this white 5. To finish the blue 3, then we have blue 4, and you look for a blue 5 to the downside. Now in this particular scenario, your wave 4 here, after we got a little bit of information, we were looking for a bounce, of course, yesterday here on support, and of course also here the daily level 92.6k, right? That was one that we kept in mind here. So looking for the reaction, observing what is happening, and in a bearish scenario, you then count this as a W, X, and then a triangle structure in a wave Y to finish your wave 4, and then you look for a move towards the downside. Now the invalidation really is 94.5k. I mean, at the moment, to be honest, it's actually lower. Now the invalidation, as price moved down, the invalidation would be 94.3k, right? So that would be the invalidation, but 94.5 is more safe, I suppose. Yeah, in this scenario, you want price to, of course, move towards the downside. Now, if you take out this low, then this definitely becomes your priority scenario, right? Now you also see a vertical line on the chart. The vertical line is a fib time, comparing your wave 2 in time with your wave 4. The fib time on my chart is a 5 fib time. The reason that's on the chart is because for a wave 4, it is very rare to be 5 times longer than a wave 2. So preferably your wave 4 is between the 1 and the 4 fib time. Right? And in this case, I have the 5 on the chart because I don't like to see a wave 4 finish after the 5. So therefore, preferably, we actually have a finished wave 4, because if all of this is still going to be part of a wave 4, becomes very long, lowers the probabilities for a wave 4, right? Of course, we would then need to continue the range without taking the low, right? Taking the low, and we'd be looking for an impulse here, which is then labeled as a wave 5. When 5 is finished, we look for a bounce towards the upside. Now, just to give you an idea of the potential targets, if you do finish a wave 5, generally the minimum target for a bounce towards the upside is the 0.382. Now we have some support here, so let's use it. If price would bounce at 89, then your 382 is at 94.7, and 87k if your wave 5 would end here, then the 382 is around 93.2k. So that would then be a minimum target, I suppose, for a bounce towards the upside. On the 4-hour time frame, there is a second, I suppose, bearish scenario, which is the one that you see here on my chart. Actually, one could arguably say that this one might be a bit more bearish, as in the other scenario here, we look for a 3-wave structure and then we move up immediately, while here we actually look for not just a 3-wave and then move up and continue, but you actually get another drop to the downside. Definitely still possible. So here we then have our WX and our wave Y. In this case, this is counted as a zigzag. Then we have our ABC, which is a flat structure. And then you look for another ABC towards the downside. Of course, the alternative was having a bounce over here, but observing the local structure, right? We pretty much know you need to take out 3K, 94.5K in order to switch the probabilities locally a bit more bullish for price to create this bounce. So at the moment, we're not at 94.5K, right? We're currently at 92.8K, and you don't want to see the low taken to get this bounce, right? So something to keep in mind. Now, if you do get a 5-waver to the downside and price continues, then you can quite simply move this down over here, and then you look for this structure. Now, wave Y can officially be a zigzag, flat, or a triangle, but at the moment a zigzag makes most sense. A triangle starts with a zigzag, and a flat also has to start with a 3-wave structure. So, you know, honestly, a zigzag at the moment is quite simply what you would be looking for. On the 15-minute time frame, if you do look for a bounce, of course, already, right, like that, then this is the way to count it. And of course, I always show a bearish and a bullish scenario. That is very important, so that you know the differences and what to look for. So again, you need to first of all take out 94.5K in order for bullish probabilities to increase, right? I actually think we may have during recording hit the, there we go, the 886. Now touching the 886 is very, very rare for a wave 2. So we can remove that from the chart. Therefore, your quote-unquote bullish scenario would then turn into an ABC, right? But after an 886 touch, it is very common to eventually take out this low. The most common structure after an 886 touch, quite funny, I can talk about this now while it's live. Most common structure after an 886 touch is to have a little bit of a bounce, but eventually a rejection and a move again back towards the downside to take out the low. It is less common to move all the way back up and then eventually come back down. It's all probabilities, right? But in general, let's make it simple, probabilities are higher to take out this low. Now, if you want to count a finish structure to the downside here, then this would be the way to do it. So we have 1, 2, 1, 2, 3, 4, 5, 4, 5. And then your first move to the upside here is labeled as a wave A, a leading diagonal, 1, 2, 3, 4, a 5-wave structure. You look for a 3-wave B and a 5-wave C. Now, of course, previously I had a potential 1, 2 here on the chart as well. And one thing that is important for both the 2 and the B is time. So the vertical line here on my chart is a fib time comparing the move to the upside, currently labeled as A, with your wave B. Of course, previously also 1, 2. In both the wave B and the 2, it's very rare for 2 or B to finish before the 0.382 fib time. So this low here had a low probability of being the end of a 3-wave corrective structure. Probabilities are higher to continue a corrective structure till after the 382 and then finish a potential 2 or B and look for price to move towards the upside, right? So at the moment, of course, we move to the downside after the 382. We wait for information to come and then we can act. We also now, of course, hit the 886. Now, the invalidation for this scenario is taking out the low at 92.5K, and the probabilities only really switch more bullish, or at least for the high of A to be taken, if you take out 94.3K for starters, and preferably, of course, 94.5 as well. And if we then look at the probabilities, then the probabilities are higher on the daily time frame for the bullish scenario compared to the bearish scenario. Now, in both cases, you were looking for a retracement to the downside, and based on the retracement, we will have more information. But quite simply, your bearish scenario has a very short blue wave 4 as explained, which affects the probabilities. On the 4-hour time frame, the probabilities are higher. We are looking for a continuation of the correction here compared to any finished corrective structure. And on the 15-minute time frame, the probabilities are higher for the bears unless price can take as a minimum the 94.3K high over here, but 94.5K of course is safer, I suppose. Now the bulls don't want to see the low taken. If you take the low, then one would be looking for a wave 5 to finish an impulse to the downside and then look for a bounce after, right? Also, of course, additionally, while recording, we now locally hit the 886, and the 886 increases the probabilities to sooner or later take out the low that we made over here at about 92.5K. I hope that this video was helpful or valuable to you. Please check out the CVD indicator video, the best indicator out there in my opinion, or the Elliott Wave educational playlist to help you understand more about Elliott waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.